If you're holding precious metals right now, what I'm about to share with you might be the most important information you hear all year. Because while most investors are celebrating recent gains, there's something happening behind the scenes that very few people are talking about. And it's creating a situation that could either make you a fortune or leave you holding the bag, depending on what you do in the next few weeks. Let me ask you something. Have you noticed how gold has been behaving lately? Not just the price movements, but the way it's moving, the volatility, the sudden spikes followed by equally sudden pullbacks. If you've been watching the charts, you've probably felt that knot in your stomach more than once, that uneasy feeling that something's different this time, and you'd be right to feel that way. Because what's happening in the precious metals market right now isn't normal. It's not following the patterns we've seen in previous bull markets, and that's exactly what should have your attention. Here's what most people don't understand. When gold surges over 60% in a single year, breaking record after record, that's not just bullish sentiment. That's not just inflation fears or geopolitical tensions. That's the market screaming at you that something fundamental has changed in the global financial system. And silver, delivering its strongest annual performance since 1979, that's not a coincidence either. These metals are trying to tell you something. The question is, are you listening? Now, before we go any further, I want you to check the description below this video. I've put together a free guide that shows you the exact saving secrets that thousands of American retirees are using right now to protect their hard-earned wealth. It's completely free, and it could save you from making some very costly mistakes in the months ahead. Just click the link in the description and grab your copy. Let's talk about what's really driving this market. Because if you think this is just about inflation or interest rates, you're missing the bigger picture. Yes, those factors matter, but they're symptoms, not causes. The real story is about trust, or more accurately, the loss of trust in the traditional financial system. And when I say traditional financial system, I'm talking about the dollar, government bonds, the banking system, all of it. Think about what central banks have been doing. Not what they're saying in their press releases, but what they're actually doing with their money. Central banks around the world have been accumulating gold at a pace we haven't seen in decades. These aren't retail investors making emotional decisions. These are the most sophisticated financial institutions on the planet, run by people who have access to information and analysis that you and I will never see. And they're buying gold like their lives depend on it. Why? Because they know something. They understand that the current monetary system is built on a foundation that's cracking. Every time a government prints another $1 trillion, every time interest rates get manipulated to keep the economy afloat, every time another bank needs a bailout, that foundation gets a little weaker. And central banks are preparing for what comes next. But here's where it gets really interesting. While central banks are buying physical gold, something else is happening in the paper markets. The COMEX, the London Bullion Market Association, these are the venues where most gold and silver trading happens, and the amount of paper gold and silver being traded dwarfs the amount of physical metal that actually exists. We're talking about leverage ratios that would make your head spin. For every ounce of physical gold in a vault somewhere, there are dozens, sometimes hundreds of paper claims on that same ounce. Now, in normal times, this system works fine. Most people who own paper gold never actually want to take delivery of the physical metal. They're just trading the price movements. But what happens when that changes? What happens when a significant number of investors decide they want the real thing, not just a promise on paper? That's when you get what's called a squeeze. And that's exactly what some very smart people think is coming. Let me paint you a picture of how this could play out. Imagine you're at a bank, and you have a deposit slip that says you have $10,000 in your account. You trust that when you go to withdraw that money, it'll be there. But what if the bank only kept $1,000 in actual cash for every $10,000 in deposits? Most of the time, that's fine, because not everyone withdraws their money at once. But if there's a run on the bank, if everyone shows up demanding their cash at the same time, the system breaks down. That's essentially what we're looking at in the precious metals market, except the leverage is even higher. The commercial banks, the big institutions that trade these metals, they're sitting on massive short positions. They've sold promises to deliver gold and silver that they don't actually have. They're betting that prices will go down, or at least stay stable enough that they can manage their positions. But what if they're wrong? What if prices keep climbing? What if more and more investors start demanding physical delivery instead of just trading paper contracts? This is where the story gets personal. Because if you're holding precious metals, you need to understand the difference between owning the real thing and owning a claim on the real thing. If you have physical gold and silver in your possession, or in a secure vault that you control, you're in a very different position than someone who owns shares in an ETF or has a position in a futures contract. When the squeeze happens, if it happens, the people holding physical metal are going to be in the driver's seat. The people holding paper promises might find out that those promises aren't worth what they thought. Now, I know what some of you are thinking. This sounds like fear-mongering. This sounds like the kind of doom and gloom prediction that never actually comes true. And I get it. There have been plenty of people over the years who've predicted the collapse of the financial system, and they've been wrong. But here's the thing. Just because something hasn't happened yet doesn't mean it won't happen. And more importantly, the smart money isn't waiting for the collapse to happen before they position themselves. They're positioning themselves now, while there's still time. Let's look at some historical parallels, because this isn't the first time we've seen this kind of setup. Back in the 1970s, after Nixon closed the gold window and ended the dollar's convertibility to gold, we saw a massive bull market in precious metals. Gold went from $35 an ounce to over $800 in less than a decade. Silver went from $1.50 to $50. People who positioned themselves early in that move made fortunes. People who waited until the peak or who didn't understand what was happening got crushed. But here's what's different this time. In the 70s, the problem was primarily domestic. It was about US monetary policy and inflation. Today, the problem is global. We're seeing coordinated money printing on a scale that would have been unimaginable back then. We're seeing debt levels that are literally unpayable. We're seeing geopolitical tensions that threaten the entire structure of international trade and finance. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to create alternatives to the dollar-based system. They're not just talking about it anymore, they're doing it. And this brings us to the real wake-up call. Because if you're holding precious metals as a hedge against inflation or as a speculation on higher prices, that's fine. But you need to understand that this might be about something much bigger than just making money. This might be about preserving wealth through a fundamental restructuring of the global financial system. And if that's what's coming, the decisions you make now could determine whether you come out the other side in a position of strength or in a position of weakness. Let me tell you about something that happened recently that should have everyone's attention. The registered gold inventory at the COMEX, that's the gold that's actually available for delivery, has been declining. Not gradually, but sharply. At the same time, the number of contracts representing claims on that gold has been increasing. Do you see the problem? More claims, less metal. That's a recipe for a squeeze. And when squeezes happen in commodity markets, the price movements can be violent and sudden. Silver is even more interesting because silver has this dual nature. It's both a monetary metal and an industrial metal. The industrial demand for silver is enormous and growing. Solar panels, electronics, electric vehicles, medical applications, the list goes on. And unlike gold, which mostly just sits in vaults, silver gets consumed. It gets used up in industrial processes, and it's often not economical to recover it. So the above-ground supply of silver is actually shrinking, even as demand is increasing. Now, here's where this gets really important for anyone thinking about their retirement. If you're sitting on $100,000 or more in retirement accounts, traditional IRAs, 401ks, whatever it might be, you need to understand that those accounts are invested in a system that's showing serious cracks. I'm not saying you should panic. I'm not saying you should liquidate everything tomorrow. But I am saying you should be thinking about diversification in a way that goes beyond just stocks and bonds. That's why I put together a comprehensive guide on how gold IRAs work. It's in the description below. It covers exactly how you can get physical gold into your retirement account without triggering tax penalties, how you can maintain the tax advantages of your IRA while holding real, tangible assets instead of just paper promises. If you have significant retirement savings, this is information you need to have. Even if you decide not to act on it right now, you should at least understand your options. Because here's what a lot of people don't realize. When the next financial crisis hits, and there will be another one, it's not going to look like the last one. In 2008, the problem was subprime mortgages and over-leveraged banks. The solution was bailouts and money printing. But what happens when the problem is the money itself? What happens when the solution that worked last time is the cause of the problem this time? You can't solve a debt crisis with more debt. You can't solve a currency crisis with more currency printing. At some point, the system has to reset. And that reset, whenever it comes, is going to create winners and losers. The winners are going to be the people who saw it coming and positioned themselves accordingly. The losers are going to be the people who trusted that the system would always work the way it has in the past. The people who believed that their government bonds were truly risk-free. The people who thought their bank deposits were as good as gold. The people who never questioned whether the paper assets they owned were backed by anything real. Now let's talk about what this means for you practically. If you own precious metals, you need to ask yourself some hard questions. Do you own physical metal or paper claims? If you own physical metal, where is it stored? Do you have direct access to it, or is it in someone else's custody? If you own paper claims, do you understand the counterparty risk? Do you know what happens to your investment if the institution holding it runs into trouble? These aren't theoretical questions. These are practical questions that could determine whether your wealth survives what's coming. And I'm not just talking about some distant future scenario. I'm talking about risks that exist right now, today. The financial system is more fragile than most people realize. It's held together by confidence and trust, and both of those are eroding. Look at what's happening with government debt. The United States alone has debt levels that are approaching the size of the entire economy. The interest payments on that debt are becoming one of the largest line items in the federal budget. And the only way to service that debt is to either raise taxes, which is politically difficult, or print more money, which causes inflation. It's a trap, and every other major economy is in a similar situation. This is why gold and silver aren't just going up because of speculation or fear. They're going up because they represent an alternative. They represent a form of money that can't be printed, that can't be devalued by government decree, that has held value for thousands of years across every civilization that's ever existed. When people lose faith in paper currencies, they turn to real money. And that's exactly what we're seeing happen now. But here's the critical point. The time to position yourself isn't after the crisis hits, it's before. Once everyone realizes what's happening, once the mainstream media is talking about it, once your neighbors are lining up at coin shops, trying to buy whatever they can get their hands on, it's too late. The prices will have already moved. The premiums on physical metal will be through the roof. The delivery times will be measured in months, not days. You'll be competing with millions of other people who all woke up at the same time. The smart money moves early. The smart money moves quietly. The smart money doesn't wait for confirmation from CNBC or the Wall Street Journal. They look at the data, they understand the fundamentals, and they act. And right now, the data is screaming that something big is coming. Think about the supply and demand dynamics. On the supply side, mining production is relatively fixed. You can't just decide to mine more gold or silver overnight. It takes years to bring new mines online. And many of the existing mines are seeing declining ore grades, which means they have to process more rock to get the same amount of metal. That means higher costs and less supply growth. On the demand side, you have central banks buying, you have industrial demand increasing, you have investors waking up to the risks in the financial system, and you have a whole generation of people who've never experienced real inflation, who've never seen their savings eroded by currency devaluation, who are about to get a very expensive education in monetary history. The question isn't whether precious metals are going higher. The question is how much higher and how fast. And more importantly, the question is whether you're going to be positioned to benefit from that move, or whether you're going to be one of the people who wishes they had acted when they had the chance. Now, I want to be clear about something. I'm not telling you to bet the farm on gold and silver. I'm not telling you to liquidate all your other investments and go all in on precious metals. What I am telling you is that if you don't have a significant allocation to physical gold and silver, you're taking a risk. You're betting that the current system is going to continue working the way it has. You're betting that governments are going to get their fiscal houses in order. You're betting that central banks are going to be able to navigate the impossible situation they've created without causing a major crisis. Maybe you're right. Maybe everything will be fine. Maybe the system will muddle through like it always has. But what if you're wrong? What if the central banks have finally painted themselves into a corner they can't get out of? What if the next crisis is the one that breaks the system? Can you afford to take that risk with your life savings? This is especially important for retirees and people approaching retirement. If you're in your 20s or 30s, you have time to recover from a financial crisis. You can rebuild, you can adjust. But if you're in your 60s or 70s, if you're living on a fixed income, if you're depending on your savings to last for the rest of your life, you don't have that luxury. You need to protect what you have. You need to make sure that your wealth survives whatever storms are coming. And the storms are coming. You can see them building on the horizon. The debt levels, the money printing, the geopolitical tensions, the social unrest, the loss of faith in institutions. These aren't separate problems. They're all connected. They're all symptoms of a system that's reached its limits. And when systems reach their limits, they break. Sometimes gradually, sometimes suddenly, but they break. The people who understand this, who see what's coming, they're not panicking. They're preparing. They're moving their wealth into assets that will hold value no matter what happens to the dollar or the euro or any other paper currency. They're buying physical gold and silver. They're storing it securely. They're making sure that when the reset comes, they're on the right side of it. And here's something else to consider. Even if the worst case scenarios don't play out, even if the system manages to hold together longer than expected, owning precious metals isn't a bad position to be in. Gold and silver have been trending higher for years. The fundamentals support higher prices. The technical charts support higher prices. The sentiment is turning bullish. You're not making a crazy bet here. You're making a prudent allocation to assets that have a long history of preserving wealth. But you need to act while you still can, because there's a window of opportunity here, and that window won't stay open forever. Right now, you can still buy physical gold and silver at reasonable premiums. You can still get delivery in a reasonable time frame. You can still move money into a gold IRA without jumping through impossible hoops. But that could change quickly. Imagine what happens if there's a major geopolitical event, a war, a currency crisis, a banking collapse, whatever it might be. What do you think happens to the precious metals market? The premiums explode. The dealers run out of inventory. The mints can't keep up with demand. The delivery times stretch out for months. And if you're trying to move money into a gold IRA during a crisis, good luck. The custodians get overwhelmed. The paperwork takes forever. You might not be able to get positioned until after the big move has already happened. That's why the time to act is now. Not next month, not next year, now. While you can still think clearly. While you're not making decisions based on panic or fear. While you can still get good prices and good service. And look, I understand that this is a big decision. I understand that it's scary to go against the conventional wisdom. Your financial advisor probably isn't telling you to buy gold and silver. The mainstream media probably isn't sounding the alarm. Your friends and family might think you're crazy. But remember, the mainstream is always late to these moves. By the time everyone agrees that precious metals are a good investment, the easy money has already been made. The people who made fortunes in the 70s gold bull market, they bought when gold was still cheap and everyone thought they were nuts. The people who made fortunes in the 2000 to 2011 bull market, they bought when gold was under $300 and everyone was saying it was a barbarous relic. The people who are going to make fortunes in this bull market, they're buying now, while most people are still asleep. So here's what I want you to do. First, if you haven't already, go to the description and download that free guide on gold IRAs. Read it. Understand your options. Even if you decide not to move forward right now, you should at least know what's possible. Second, take a hard look at your current portfolio. How much of your wealth is in paper assets that depend on the system continuing to function normally? How much is in real, tangible assets that will hold value no matter what happens? If the answer makes you uncomfortable, it's time to make some changes. And third, if you're serious about protecting your wealth, if you have $100,000 or more in retirement accounts, I want you to take advantage of something special. For people who've watched this video all the way to the end, we're offering an exclusive one-on-one educational web conference. Completely free, no obligation. This is a chance to sit down with someone who understands this market inside and out, who can answer your specific questions, who can help you figure out the right strategy for your situation. But this is only available to American retirees with at least $100,000 in retirement accounts. If that's you, the link is in the description. Mention that you watched this video and we'll get you scheduled. Because here's the bottom line. The precious metals market is sending you a wake-up call. The question is whether you're going to answer it. The central banks are answering it. The smart money is answering it. The people who understand what's happening in the global financial system are answering it. Are you going to join them, or are you going to hope that everything works out fine and you don't need to worry about it? I can't make that decision for you, but I can tell you this. Years from now, you're going to look back at this moment, and you're going to either be grateful that you took action, or you're going to wish you had. The choice is yours. But whatever you decide, decide now. Because the window of opportunity is closing, and once it's gone for good. The wake-up call is happening right now. Don't hit snooze.